Hello there, my name is Oliver and welcome back to my very personal finance channel. For anyone who is new or might have forgotten, we are following the first three rules laid out by a book called The Richest Man in Babylon, which is now about 95 years old. So the rules that we're following are: start thy purse to fattening, control thy expenditures, and make thy gold multiply. As you can see from the screen, we've definitely started our purse fattening, up over £8,000. Very happy. I mean, I feel like that's fattening nicely. We've continued to make sure that we don't spend more than we make, which means that we're not incurring any debt and thus not incurring any interest or anything along them lines, and making sure that our investments are the first thing that's paid out. That way we can always invest, and anything that we're sort of missing out on throughout the month, at least we know our investments are covered. And thirdly, making thy gold multiply. I'm investing purely for dividend income, and judging from October's dividends, we're definitely on the right track. Okay, so looking at our purchases for this month, we bought some IUKD, which is just this guy here. As you can see, we own 120 shares now with an average cost of £5.90. We actually bought 15 shares for £110, which in my opinion is a bit overvalued. As you can see, I've got a price alert for £4.70, because if that happens, I will definitely be buying. Like I say, in my opinion, this is a little bit overvalued, but that is the sort of growth that we're seeing, and that's where we invested. It does give us exposure to 51 companies in the FTSE 100 which all pay dividends, which is part of the reason why I bought it. We also bought 7 GlaxoSmithKline. As you can see, over a year we've bought in here, so quite high in the grand scheme of things, and it's tipping higher still. To be honest with you, I only bought 50 shares. I bought 7 shares because I had 43 and I wanted around 50, which is a terrible reason to buy shares. But looking at it over the week, it looks like it's certainly paid off this week. We'll have to wait and see. But GlaxoSmithKline are a really good dividend payer. They pay 20 pence a quarter. So I'm going to be very happy with them. And I also bought 50 more Vodafone shares. As you can see, over the month they are dropping like a stone, so I bought 50 more just to bring that average price down a touch. If they're still down when it comes to buying next month, I will definitely buy a few more. They only pay twice a year, but I think they're going to go quite far. And there's also some discussion of Vodafone teaming up with Elon Musk and Starlink and doing something there, which if that happens, we'll be in a very good position, and I think the share price will really, really rocket. Okay, and moving on to dividends. This month has been really, really good for dividends. We've got 66 pence from Nordic American Tankers. Now, they are doing shocking at the moment. I'm down about 50% or something along those lines, which actually puts us in a good position for the break-even fallacy to take place. So we're down 50% on them. I won't be buying any more. But as it stands, I'm going to keep hold of them because they are a oil shipping company, and I think especially with the way that economies are going, commodities and therefore people transporting commodities are going to be in a position to make money. I should probably even look at investing in some silver and gold mines, something along those lines. So we got 66 pence from them. By all accounts, a terrible dividend, and if I wasn't down 50% on them, I'd have sold the stock already. They might even come in useful when it comes to tax purposes towards the end of the year. Let's say I need to reduce the amount of money I made from stocks. I can sell them at a loss, which will then might bring me back down below the threshold, so I don't have to pay any taxes. So it's always handy to keep something like that in your back pocket. We got £9.38 from AG&C Investment. They're one of our monthly dividend payers. So far, a very good company. They do government-backed mortgages in the USA, and they pay about 12 cents per share per month, which works out at an 8% return. And we have 125 shares, so again, slowly but surely increasing our position in them. As you can see, I paid $2.25 tax, so the tax rate's 15%, and that's just, it gets taken out before I even touch it. We received some shares from Aviva, some dividend from Aviva. Now, we've only got 100 shares in them. As it stands, they're currently sitting at £3.98, and they pay an average of about 20 pence per share, which is a 5% return. So they only pay twice a year, but very happy with them, and I will continue buying. They seem to be dropping a touch just recently, which is very good because it puts us in a better position to buy more. And finally, the largest dividend, we had iShares UK dividend, which is actually one of the reasons why I bought some more this month. As you can see, we got paid out for 105 shares, not 120. That's because we bought 15 this month. They paid out a total of 16.5 pence per share, which equated to £17.48, which is it's a very good dividend. I mean, it's really, really good, and I'm hoping for more, especially as the UK's economy opens up and things start to go back to normal, he says in inverted commas, because, I mean, all signs point to us going back into a lockdown by Christmas, but that's for the politicians to decide. I thought I'd get some extra exposure to the 50 companies, and it doesn't bring my average cost up too much, so I was very happy doing that. And yeah, portfolio rise, we're sitting around 10% up, which is okay. I think it's about average for what a novice trader should be making. So I'll chuck them dividends into the spreadsheet and we'll see what we get. Okay, so chucking those dividends into the spreadsheet, as you can see, we've got a total of £34.86, which is fantastic. I think that's the third highest or second highest that we've had all year, which is a very, very good result. I've noticed they seem to be edging more and more towards that upper £20 limit, which is very good considering this year all I wanted was £10. And next year I'm after making £35 a month. So hopefully this puts us in really, really good stead. So going to the total, as you can see, yes, so we've got the second highest apart from June, which is where a lot of our biannually and quarterly dividends coincide. So an average of £22.34. I mean, it's 100% more than what I wanted. Yeah, it's going really, really well. So happy days. And if you've made it this far, thank you very much. Put in the comments, let me know what you're investing in, if you're new to investing, if you're old to investing, if you're optimistic, pessimistic about the future. I think it's just an incredibly interesting time to be investing, particularly for those who have just started. I mean, obviously, I suppose it's always uncertain, but I'd love to know what people's general sentiments are, especially if you've been investing for a while. Have you got any tips or tricks, especially for valuing companies? Yeah, chuck them down in the comments. I'd love to get some kind of conversation going. And that's it from me. See you later.